All right, folks. So we are live. Happy Sunday from the vacation home here in the Great White North, city of Toronto. Crushing, killing, living the dream, working it out, my guys. It has been a wild start to the year, I must say. Business is turning around in a way none of us could have ever imagined. And on top of that, I want to make sure you guys can hear me okay. Check test 1, 2. Let me know if you guys can hear me. Thumbs up, thumbs up, thumbs up. Let's go, because my little ticker there isn't saying that I'm getting a lot of audio out of this. So just give me a thumbs up if you guys can hear me okay, because we're going to be getting into some in-depth discussions about financial independence, retire early, and what it exactly takes to get to your goals. Because we've just been doing a TikTok live stream, and we met a 40-year-old who was asking us about what she had to do to retire, and I thought it was a very fascinating question. And this is a full open Q&A. If you guys want to get into some discussions about stocks, balance sheets, anything you'd like, feel free to throw it up, because we're going to be doing this for about 30 minutes or so. But I thought it was a wonderful conversation to be had, because I think people think that sometimes you have to start super early in life to reach your financial independence. But a lot of people are starting later in life. And I'm going to relate more to my personal circumstance, because obviously I feel like most of you are probably between the ages of 25 and 35. With all the money you are set to make this year, with your new promos and platforms and stuff, will you still keep putting out YouTube vids? This My buddy threw this question at me, and he says, "Don't you find it boring to make videos where you're not making money anymore?" And I was like, "It's a tough challenge, because creatively, I love making content just for the sake of making content." But I thought it was hilarious, because when you're making a couple $1,000s a video, seriously, like, people are paying me $2,000 to make videos, and there's an endless amount of them. Like, there's company after company that's just willing to pay you a stupid amount of money just to do a quick, not even to like just throw it into your channel, but just to make something for the company on YouTube, so they have something to reference to. They pay a lot for that, and it's just crazy. So I'll always make content, guys. Like, it doesn't. I'm on TikTok already. I make memes on Facebook. I do stuff that has no relation to corporate profiling. So I mean, I'm in this game forever. I'm in this game forever, boys. I'm going to try and find a way to make more in-depth content, I should say. Like, I want to try and find a way to make some more longer frame content around certain things, rather than just quick burst content like I primarily do every day right now. But got a good question for you. So I'm currently up 20% on VFE, which is a large chunk of my portfolio. People keep telling me to buy a seat to be globally diversified. Think it's needed? What do you mean people keep telling me to buy seat? Is that a stock? Is it like VTI till I mother freaking die? VTI, man, the Vanguard Global Index Fund. 20%. Honestly, VFV is all you need. If honestly, S&P 500, me and Matt were just talking about this, that VTI, the top 20% of the holdings are the top 10 same holdings that are in VOO or VFE, because VFE is just the Canadian version of VOO, or the Vanguard, just flipped in Canadian dollars. Is Apple still a buy? Apple is always a buy. I always recommend, if you can buy the dips especially, but I would be picking up the S&P top 10 always. I stick to the same. My portfolio, I'm trying to round them up by using all these corporate profiles and all this big money coming in to make sure I own these six giants that make up the S&P top 10 that I like. These are my personal favorites. Obviously, is Apple, Microsoft, Amazon, Google, Facebook, and Tesla. Those are like my six favorite companies of all time for growth. All of them have done exceptionally well for me, and the only two I've never owned was Google and Amazon. So I'm going to try and get them in my portfolio in the coming months. But I know people will tell you that Apple's born out, like the iPhone sales might drop. The people have been saying that shit for years. Apple's not going anywhere. They make a crap ton of money. They're the largest company in the world for a reason. I think they're going to continue to do fine. You might not get the same rate of return we've experienced in the past, but it's the greatest company in the world, man. You probably have an iPhone in your hand. Greatest piece of real estate is your phone screen. Don't forget that. If you want to own the best real estate in the world, it's your phone screen. It's not a real property. I mean, think about it. Apple's dictating how Facebook and Google can operate on their platform, for Christ's sakes. Like, they literally dictate the internet at this point. On what platform are they paying 2K a vid? We generally spread our promotions out across the platforms. If I'm being honest, it's just a general. I mean, we're just talking stonks, right? So I mean, I like to spread it out. Is Apple? What do we got? Do you own any international companies? Or I own a lot of international companies. I'm Canadian, for Christ's sakes. I own I own all the Canadian, well, most of the Canadian banks. I own a lot of Canadian utilities: Algonquin Power, Northland Power, Hydro One. I love being globally diversified with things like British American Tobacco, one of my favorite companies of all time, my dividend stocks of all time, BTI, man. I think it's more important actually to be currency diversified than it is stock diversified. I know a lot of people in the US primarily operate in USDs, but I try and recommend finding a way to generate cash flow in other currencies. Right now, my portfolio is 50-50 split between CAD currency income and USD currency income. So I literally have two separate accounts. One's Canadian dollars, one's US dollars. One brings in US dividends and US capital gains. One brings in Canadian dollars and Canadian capital gains. And then I try and diversify further by buying assets like gold and silver while also buying into assets like crypto. I think currency is the biggest fault to most people's portfolios, because if a currency goes down and that's how your entire portfolio operates, unfortunately, your portfolio goes down with it. So I think currency diversification matters a lot. Are you split funds a good source of dividends? I don't do split funds. I don't do any option funds for dividends. I'd rather just see what I want to get is I don't need the dividends today. I want the dividends probably more in the next 5 to 10 years. So I'm trying to buy companies that have a high compounding rate of dividend growth. To me, it's not about getting a capping in a 6 or 10% yield, though I have some high paying stocks like MO or RioCan, some REITs. I'd rather buy something like an Algonquin Power or a Hydro One, even though these companies are still relatively new. They've been really rapidly increasing the dividends. So hopefully they double them every 10 years because that's just a great way to just really quickly increase your cash flow by the time you're 35 or 40 or 45 to 50 once you get closer to that retirement age. If you were to buy real estate, how would you decide which of your positions and how much of each to sell to make a down payment? I wouldn't sell a single one of my positions. I would just go make more money and come up with the down payment. I'm not selling stocks to buy real estate. That's the dream right now. I mean, stack cash, buy real estate, buy stocks, just keep stacking. It's not about using your savings to buy things. You should already. This is a thing that I kind of get frustrated with, because a lot of people, I think if you're allocating money to buy real estate at some point and you need to park cash, I would park it in safe stocks, VOO, VTI, just anything that's super stable because you might plan on utilizing it in about, I'd say, a 3 to 5 year time frame. That's what I would start doing to allocate real estate money. But if you're allocating money into good growth stocks like Facebook, I would not touch that money. That investment vehicle is going to be incredible. Why would I want to shift it into a different one when that one is already so great? You have to allocate your money for specific things. And I will be allocating money for real estate at some point. I'm looking at condos. I'm looking at things that'll cash flow more conveniently. And if I want to live in them, I can. Like, I don't want to buy, like, say, a big property that I got to cut the grass, fix the toilet, blah, 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 roofing repairs. I want to buy something like a condo, just pay the condo fee, put enough of a down payment that it cash flows that 6 cap. If you can just get a 5 or 6 cap, I'd honestly be happy, especially in a nice area in a condo where I don't have to do a lot of maintenance. That's always the dream. And I've been looking in areas like Barrie. Canada's got Lake Simcoe has got a lot of beautiful properties and nice cities that aren't near the Toronto city, so it gets a lot cheaper. Are you looking at any REITs right now? I look at REITs every day. I love REITs. RioCan is still one of my favorites, so I wouldn't buy it here. It's kind of priced in a lot of stuff. Unfortunately, REITs right now, like banks, aren't nearly as attractive as they were. I have a harder time buying them right now because, like, I love STAG. Honestly, if I were to throw money at anything, and I did, was STAG Industrial when it dropped off, and we picked that up at a beautiful price point. Oh my God, the thing's at like $38 or something right now. I like REITs that not only have stability but are like future forward looking. And with STAG, I mean, you got Amazon. They're making parts and like shipping stuff for Tesla, BMW, like all the major auto manufacturers. It's incredible. I love STAG. Logistics and industrial REITs are incredible right now. Actually, there's a Canadian one called Dream Industrial REIT. It's done very well. But the reason I don't buy Dream Industrial is they're trying to diversify their portfolio, because I think 30% of their income comes from Magna. And Magna is a huge conglomerate. They're a massive auto parts manufacturer, and I believe they're going to be around. I just like STAG because the management, oh my God, triple A, baby. Like, they have done, I don't think any one of their tenant makes up more than 3% of their income. And that 3%, like, their largest tenant is Amazon, for Christ's sakes. Like, that management, I want to shake that guy's hand. I'm like, you guys have just done what you need to do to make this shit proper. I mean, I've never seen a real estate nearly as proper as STAG, in my opinion, for logistics. That is interesting. Thank you for your input. Yeah, I like my RioCan just because they're getting into it's. I always said if I wanted to own a REIT, I want to own like the most prime real estate. If I was a multi-billionaire, what kind of real estate do I want to own? In Canada, that's RioCan. RioCan has the most premier properties I've ever seen in my hometown city. I want to be a part of that. Unfortunately, that could come with some risks, but they've done great. I've made a great return on them, so I'm happy. Do you think RioCan will raise the dividend again this year? I don't know. Management seems more inclined to keep that capital to continue to divest it. So the new management, I like the new guy. I have to admit, the new guy seems a little more aggressive than Sonny did. Sonny was a great manager. I mean, he's been in that company for like 20 years. But the new guy that moved in, I've listened to his conference calls. I like what he's doing. I like the fact that he's very forward looking. He's really interested in obviously diversifying the portfolio, getting more into stable tenants like the banks, the LCBOs, getting more into residential. I love what RioCan's doing. Honestly, it's my favorite real estate of all time. Come down to Toronto. I'll show you the properties. If I show you RioCan's properties, you'd be like, oh, damn, I see what you're talking about. They're beautiful, man. They're just beautiful. And they're malls. So, I mean, the malls got crushed, or a lot of their malls, right? So when malls got crushed, it was the greatest buying opportunity of a lifetime because city malls, guys, Ontario just opened back up. Did you see the videos in Toronto? It's crazy. It's crazy, man. People are lining up down the Winners, all these restaurant patio. If you thought that restaurants and malls were dead, yes. If you were Jimmy Joe on some off street in the middle of nowhere, you're dead. But if you a downtown Toronto mall like Yorkdale, like holy crap, like business is coming back stronger than ever. Still think I'm getting into some smart centers. Yeah, I like smart center REITs. I just haven't bought into it because I'm very finicky about buying new stuff that I don't understand as well. Because see the way I talk about RioCan, I know the management, I've seen the real estate, I've been owning it for years, I've been up and down it. I bought it for my mom, my girlfriend, I've listened to dozens of conference calls. I'm comfortable with it. With smart centers, I'm not there comfortably yet, just because there's some things that kind of I haven't listened to enough conference calls yet. I haven't figured out what they're doing to be comfortable. It takes I like guys, I know a lot of people just jump in and out of stock. Sometimes it takes me years to buy a company. I mean, look at MindMed. I knew about MindMed for a whole year before I bought it. I mean, there's companies that I follow on my watch list for a very long time. And just sometimes, like the universe has to align for my brain to click in a way where I feel comfortable loading up. Because I only own 20 stocks. I'm a boring investor. What do you want? I mean, I don't own a lot of stocks, guys. Very boring. Yeah, Maddie likes his QYLD. QYLD is pretty good for the good old options playing there. Have you or would you consider cover calls? Me and Matt talk about this sometimes. I just don't make the time for it. I feel like there's a good opportunity there to make money. Obviously, doing covered calls on stocks that don't cash flow, like your Amazons, your Googles. If you're holding on to them for a very long period of time, I think it's a great thing to do. I just don't make the effort for it at all. I mean, I've talked to Davey, and if you're doing safe options playing, like they said that you can make like what is it like 1-2% a month, so you could be making like a 12 to 15%, maybe even a 20% return. But to me, it's like, okay, well, I can just take that money, throw it in Facebook, and then I don't got to think about this every month. Like the least amount of shit I got to think about right now makes me sleep easier at night. I don't like adding new things. Like there's 10,000 ways to make money. I have a whole list of them, and I'm one guy. Okay, I'm one guy. I wouldn't mind learning, obviously, in depth how options work a little better. That's something that I'm trying to aspire to because I like learning the tools. Because then if I run into a situation where I can utilize them to something that lines up, then sure. But not the biggest fan personally right now of doing options. It doesn't tickle my fancy enough. Have you looked into TTCF? What do you think? No, I have not, but I can pull it up real quick just to give you guys some quick Q and A's because that's what this is about, and I don't want to let any of you fall off here. So TTCF is the stock. So just take a quick peek at it. Oh, Tattooed Chef. God, duh, Tattooed Chef. Or wait, TTCF. That's Tattooed Chef, right? Or am I an idiot? Am I an idiot? No, it is Tattoo Chef. Okay, sorry, someone else was coming up. Tattoo Chef is great. It's a great company. Those are like small cap growth stocks. Those are like your financial. We all have our small cap growth stocks, guys. Like everyone's got their own little plays. I love the company. I think it's great what they're doing. But it's like I could tell you IPOE. Sophie, great stock to own. I don't own it. I could name 20 stocks right now that I think would be great to own. I just don't own them because they didn't fit into my strategy. I just never got around to it, and I don't like buying small positions. I'm a guy that if I'm buying a stock, this is like Bitcoin for me. Like if I look at something that is as volatile as Bitcoin or as a small cap play, if I'm not comfortable enough to put 10 grand in it, I'm not buying it. I just it's always that itch on my back that if I'm investing into the company and I put a couple grand in, I get interested. Now I'm going to pay attention. But sometimes those companies they don't interest me enough, and I'll just pull out. I'll just say, okay, forget it, because there's just things that just didn't line up enough along the way. Um, it's not easy to build a portfolio. I mean, it can be easy, but when you're buying individual stocks, I don't know, maybe I'm just OCD about it, but I'm very like in the beginning days, I only owned two stocks. I mean, when I first started investing, I only owned two companies, and they weren't even good they're great companies, but they're not like your foundational companies like your Amazon or your Microsoft. They're like your Northland Power and your Canopy Growth Corp. I mean, I was buying highly volatile stuff back in the day, but that's good. When you have a small portfolio, I think volatile is good, because so long as you're not volatile with 100 grand. I was volatile with like a couple $1,000, maybe at most. If you already had your Amazon, Google positions built, then maybe Tattooed Chef would be a better fit for you for some of the aggressive. Yeah, but I also like the Very Good Company. The Very Good Food Company is amazing. I mean, me and Matt, when we're doing a lot of these promotions right now, guys, I would personally buy some of these stocks. I'm like, a lot of people think that just because we're getting paid to talk about some of these small cap companies that approach us, like, I mean, MindMed was paying to be on a lot of YouTube channels that I knew about. They didn't pay me, which was annoying. But I mean, there's a lot of these companies that pay us to talk about them, and I honestly would own them. There are companies that I would, and I try and make it as transparent as possible. That like sometimes when I talk about these stocks, they're from my own volition. They're things that I think are true about the company, and I would put money in them because some of them are just they're just incredible growth vectors, and they actually have proven business models. I think people have to recognize when you're buying these small cap companies like Tattooed Chef, do they have a proven business model and is it scalable? And if you think that's the case and they're already making great margins, then go ahead. What are Tattoo Chef's margins actually? That's a good question. Let me see if I can pull that up real quick. Margins are something I pay a lot of attention to right now because when you have companies like Facebook that are capping at 30 to 40% margins and Google, like, bringing in just fat margins, I get kind of annoyed when the company, like, I mean, even Apple has 30% margins. If a company has like 10% margins and it's not a utility and it's not something that is foundational to society, I usually don't want anything to do with it unless they're really good at it. I mean, gross margins really matter sometimes because it gives them leeway. If you're going to own all the biggest tech companies, Amazon, Google, Microsoft, Apple, why not just load up on QQQ call and call it a day? Because I did that once and it doesn't excite me. It doesn't. I looked at QQQ and yeah, 50% of the holdings are those top weighted tech companies along with PayPal, Nvidia. I mean, I've gone up and down. Actually, you know what's really funny? I know that I worked for the company. I actually performed for Invesco. Invesco is like it's a huge conglomerated company, but they do a lot of operations in Canada, obviously. And I actually got to work for Invesco. I got to perform for them, meet a lot of the people there. My girlfriend's cousin actually works for Invesco. Actually, I think he just switched jobs to TD. But guys, ETFs just don't excite me. I don't know why. I hate owning ETFs. I own them and they're boring as hell. And I just don't like them. I'd just rather own the companies I like in them and just build them to scale and be like, hey, I'm the ETF. I'm not paying a 0.5% management fee because I'm the ETF. If I don't like Amazon because it pisses me off, I can sell it. If I don't like PayPal, and I don't like PayPal, I mean, I look at some of the companies in QQQ and I don't like them. PayPal's a great business, but I hate them. I think what they're doing is pissing a lot of their fan base off, like me. I use PayPal a lot. I hate them. I would rather use Bitcoin. If Bitcoin was less volatile, I'd rather use it as a payment platform than PayPal. I used to love PayPal, but unfortunately, their fees got insane, guys. I paid over $1,000 in PayPal fees this year. It's stupid. It's so dumb. They've gotten so greedy to get to the top 10 S&P. Like they're just, I think it's going to ruin their business. I think somebody's going to disrupt their business like a blockchain technology and they're screwed. That's it. They're done because they've just gotten too greedy. If they just stop being so greedy, I'd love to own them. If they just kept their margins reasonable, let people just kind of integrate them into their Shopify platforms and just keep using what's there. But for some reason, management just seems to think people like paying huge effing fees. They charge more fees for conversion, for currency conversion than my bank does. They take a huge fee, like a 2 or 3% fee off the top just for me accepting money. Like it's just dumb. I hate them so much now because like it's not a good platform when Bitcoin charges no fees. I can convert it to any currency and immediately transfer it to my bank account and it takes nothing and it costs hardly anything. Like it's just a better mousetrap. What type of performer did you used to be? I was a full-time magician. I used to do I worked with my business partner who ran a DJ company while running my own business as a full-time magician. It was a great career. I got to entertain for companies as big as the Royal Bank, to weddings, to kid shows. It was a very rewarding career to me. I mean, it got my portfolio off the ground to where it is today, right? I was very blessed. Why use PayPal over Visa or MasterCard? I don't. PayPal isn't a replacement for Visa or MasterCard. You can't use PayPal at the LCBO. PayPal is just to accept international currency. If you're ever dealing with international money, you're not going to use your bank. Your bank is a joke. They want you to wire transfer it in. They charge you for it. It's a pain in the ass. PayPal is the best moderator. I mean, Elon Musk was a genius. I mean, he clearly saw the hole in payment gateways and he fixed it. I mean, that's why PayPal is one of the largest companies in the world. Elon's a smart guy. Visa and MasterCard don't do what PayPal does. So you're thinking like PayPal is like a Visa or something, but it's not. What else we got going on, guys? Oh yeah, I was going to check out the margins on Tattooed Chef really quick just to see what we're looking at. Because anytime I see a 10 or 15% margin, if it's not a utility or something, I get really scared. Because I mean, I see companies that are in trouble right now because their margins were so low and the pandemic really kind of destroyed them. So let me just take a look at the quick statistics here, and I'll tell you guys for Tattooed Chef, what are we looking at for margins? And hopefully, unfortunately, I like looking at the balance sheet margins because usually what you want to do is look at the top line revenue, and then you want to look at the gross margin after the basic expense to generate the revenue, because a lot of companies do so many write-offs and they're trying to scale the business. They're not showing a positive EBITDA. So what you want to make sure is you're looking at the gross margin of the cost of revenue. How much revenue do they have of income after the basic expenses to earn that? That's a challenging ordeal because sometimes if you just look at EBITDA, it doesn't show you enough information. Yeah, so their profit margins are 32%. This is interesting. The profit margins are 32% on Tattooed Chef, but the operating margins are minus 5%. This is what I'm talking about. See, they're scaling their company and they're losing money scaling. But if they were to stop scaling, they would have a 30% margin. That's a good business model, right? What percentage of your portfolio do you see being in index funds in the next 5 years? So, yeah, I keep saying that my plan is when I hit 30 years old that I'm gonna step back from buying my individual stocks because I feel like I'm happy with kind of where I'm at with them, and there's just a few more things I want to own. And don't get me wrong, I'm still going to buy individual stocks. I'm still going to add to the positions I have. It's just that I'm trying to understand my risk tolerance, and you have to kind of play within your realm of competency, in my opinion, when it comes to understanding risk tolerance, because most people are idiots. They don't understand what risk even means. Luckily, I do. If you're in your 20s, it's a great time to take on a high amount of risk. I did. It worked out great. And if I lost that money, it wouldn't have killed me because it was only like 10 or 20 grand. I took on some highly speculative investments, Canopy, MindMed, et cetera, et cetera. They've done very well. I mitigated that risk, did great. But going into my 30s, now that I have a built out portfolio, I'm like, why do I need the risk? Like it comes down to the point of preservation over growth and trying to balance that out. Because once you get into the 6-figure range, and I talked about this with Matt, if Matt's portfolio is worth $1 million and it goes up 10%, he just made 100 grand. In my portfolio is 300,000. If that goes up 10%, I just made $30,000. That's absurd to me. So I'm like, if my business is also doing very well, why not focus on my business and let your portfolio be what it's supposed to be, passive, because that's a full-time income off of a very safe investment. So I'm like, and I'm doing better than that. My average rate of return is like 30%. So it's like, I'm going to pull back. I probably won't get that much of a rate of return, but even if I can average a 15 or 20% rate of return, well, keep adding the money that I'm adding to the portfolio. Like, there's no reason that my portfolio shouldn't be growing 100K a year at this point. And it is. I mean, it's growing at an absurd rate right now. And that's because I'm adding a lot of capital, and it's progressing because I'm very diligent about my investments, right? Scott's Miracle Grow, baby. Thanks for throwing that one up, Noah. Yeah, I've been watching that suck a dip. I've been watching that suck a dip, and every summer rolls around, and I'm using all them Scott's Miracle Grow products on our farm. I see my mom buying bags of fertilizer, and I'm like, and growing stuff. Oh my God, guys. Scott's is the stock that got away. We all have a stock that got away. And I was in a position where I was looking at some of the MJ stocks, and I was owning Constellation brands at the time. Management kind of turned me off, so I sold Constellation. But Scott's Miracle Grow, man, that's just an incredible business. That's if it drops enough or we head into a crash, I'll buy it. It doesn't tickle my fancy right now because the dividend yield is just so low, and they did a special dividend last year that made their dividend yield 5% because they made so much friggin' money. Because they're in hydroponics now, they're selling. It's like the gold rush. In the gold rush, would you be rather mining for the gold or selling the picks to the gold miners? That's what Scott's Miracle Grow is to the MJ market. Not half these MJ stocks aren't going to be around in the next 10 years, but Scott's Miracle Grow sure as hell is going to be, and they're going to keep feeding the companies that survive. So I love them. I think they're probably one of the most foundational they're just a great company, man. If you can pick it up, I mean, at these levels, I think it's down to about $200 a share. Let me just take a quick look. Scott's Miracle Grow, man. That's my love that got away. And it's actually down to $192. Damn. Yeah, no, if this drops enough, I'm buying it. I'll add it in a heart. Actually, I've been thinking about it lately. Actually, it's on my watch list, and it's at the top of my watch list. And I every time it drops, I'm like, oh baby, it's getting there. I mean, look at it. It's at 192. It's down 23%. I'll probably be picking it up at some point. I don't know when it'll work its way in there, I'm sure, or I'll miss it again and it'll just fly up another 50% on earnings or something. Who knows? It's a small cap too. That's the best part. Like it's such a great company because it's not a huge conglomerate. It's big, but it's not a massive conglomerate. It's in this nice mid-range $10 billion market cap, and it's literally the foundation to everybody's growth in their garden. It's the foundation to every MJ stock, for Christ's sakes. It's the foundation to every hydroponic guy that wants to try growing his own MJ products. God, it's so great. It's so great. I love it. I love it. Have you ever looked at GDNP? I've been invested for a while. I'm hopeful it will explode once more plastics bans are in play. Yeah, there's been a lot of good companies that are poised to take over the plastic revolution because plastics are obviously destructive as hell, and there's a lot of companies innovating really cheap replacements for even like Keurig pods. I did a sponsored video for a company that was making disposable, compostable, like those Keurig. You guys have those Keurig coffee machines. You put a little pod in, they're plastic. They're the most wasteful thing on the planet for like one-use coffee. Every one-use coffee, you're just destroying the planet with plastic. So this company came up with really awesome. I don't know if they were. I can't remember what they used to make them, but let me take a look at GDNP stock. I'll just give a quick rundown while I keep reading through these as well. Van Eck Vector Semiconductors. Yeah, semiconductors. I'm an idiot about. I used to work at a computer store, and unfortunately, I was an idiot. I should have recognized semiconductors early, but I'm still an idiot when it comes to them. I don't understand the industry at all. I'm shocked, and I don't understand how company like Apple have been able to work around the problem when companies like Sony effed it up on the PlayStation, Xbox effed it up on the obviously on the release of those. You got auto companies right now that are in short supply, yet Tesla somehow dodged the chip shortage. Like it's such a convoluted mess that I haven't had time to wrap my head around it. I know it's one of the greatest industries in the world. It's going to continue to be thanks to Bitcoin, all of these other things. I mean, even self-driving, everything is using chips right now, especially like graphics cards. So it's like I just don't know anything about it. Every time I look at the industry, I get overwhelmed and I'm like, I don't get it. I don't get what makes Apple better than these companies or gives them a supply chain that's more strategic and more better, that's kept them going. Same thing with Tesla. Like what did Tesla did something to keep their, because I look at every auto company, guys, they pulled back. Look at Microsoft, look at Sony, they've all pulled back on. I mean, there's been a huge shortage of new system game releases because chip shortage. So I mean, it's affected every major business except for somehow some of them that have outsmarted the business. So I don't know what they've done, but something to look into for sure. So good natural products that you've thrown at me here. It's a penny. It's roughly a penny stock. It trades for $1.11. I'll have to take a look in this because I'm not sure what they do. But thanks for the recommendation, because obviously if you can get into a business that's moving away from plastics, I think it's such a tricky business though, because it's margins, right? Like plastic's a cheap material, whereas all these renewable or these disposable products that replace plastics are very expensive usually. So, but I've seen people using like mushrooms, and like I think mushrooms might become a huge replacement for a lot of things because of the way they can grow them into shapes. I know it's a really weird thing to say, but look it up. There's companies using mushrooms and mold right now to make disposable products for shipping and stuff. It's really interesting. Mushrooms, man, I tell you, they're one of the most really interesting material. Why do you think Stag popped so much? Because it's a great company. I mean, it was trading down, and it's like, guys, the management's unreal. It's just like you're never going to get a more stable monthly paying dividend. I don't know how else to say it. Like you just got to give credit where credit is due. It's like, why did Apple do so well? Because you just got to give credit where credit is due. It's a great company. Stag is just one of the best REITs I've ever seen. It's literally one of the best REITs I've ever seen. Now there are some things I don't like. There are some discrepancies, like unlike say RioCan, because RioCan has been really good at not diluting shareholders. In fact, they've actually bought shares back in the past. They've done a good job at keeping the share float flat. Stag, however, what they do is I think they go and find industrial buildings that are being sold, and they know they can have tenants because God knows Amazon's expanding. They have the connections for expansion. So because you're connected with BMW, you're connected with Tesla, you're connected with Amazon, you're connected with all these big conglomerates, FedEx, all these big companies. They're growing so fast right now. They say, hey, STAG, you're one of our biggest clients. We need more space. Find us more warehouse space. They're like, okay, well, let us go raise some capital. So we're going to dilute shareholders. They add more shares because they know people like me are buying the hell out of the shares. They take that raised money, they go buy the building, and then I feel like they immediately have a tenant to lease it to. So that's the one thing that I don't pertainably like about the company is the amount of dilution. But at the same time, if they stop growing altogether, it's going to be one of the most stable monthly incomers like ever. It's just so beautiful. Nexi Innovations. Yeah, thanks for throwing that up. Nexi Innovations is the company that's doing the Keurig pods, I believe. Don't quote me on that, but I'm pretty sure it is. Yeah. Excuse me, guys. Yeah, Stag. I wouldn't buy Stag here. I love it a lot, but I wouldn't buy it here. I mean, we were talking about that when it was $30 a share. I'll show you my buy price on it. It's amazing. I mean, God, I picked that up. It's such a good buy. I remember when we got all giddy about it, and I'm like, why is it trading down? Like, it keeps going down, but I can't figure out why. And then they did a bunch of acquisitions again in 2021 already, and they just keep crushing. I would shake management's hand if I could just shake management's hand, man. I would love to go to one of those board meetings and be like, yo, how did you guys figure this shit out? Like, you guys just, oh my God, why does it keep erroring? Sorry, give me one second. I'm trying to log into my investment account. Somebody probably just hacked it and changed my passwords. Here we go. No, error. Scotia card does not, my Scotia card does not match that password. Oh, I know why. I'm not even using the right password. You guys have me distracted here. Let me show you my stag position real quick. The only thing I love about stocks is I feel like it protects you from getting robbed, because if anybody ever broke into my accounts, what are they going to do? Sell my positions and then wait 3 days for them to close and then transfer them to my bank account. Like, I feel really secure with the banks that I use too, because people actually answer the phone. Unlike Robinhood and some of these other companies, like I at least I can go into the bank or I can call somebody. Sometimes the calls take some time, but here's my stag position. Like, take a look at this. It's so beautiful, man. Look at that. I mean, I've only owned this thing for, I hope you guys can see it because from my screen, it's kind of inverted, but I'm up 23%. I haven't owned this for more than a year. Think about it. I haven't owned Stag for a year. I'm up 23%, and I've been collecting dividends like a madman. It's a beautiful company. Someone hacked your account and bought 100% Enron. That could happen. I mean, they could sell your positions and then just re-divest them into something else. I mean, that'd be funny as hell for sure, for sure. But anyways, guys, we're 30 minutes deep. I appreciate the 50 of you that stopped in. I feel like we always have good conversations when I just kind of do these streamline stream of consciousness conversations, because you guys always throw in some of the most entertaining things. I see Noah says Tesla in-car gaming is next level. I swear to God, like, I sold Tesla, took a huge profit. I had to buy it back. I don't know what the heck happened with that company, how they inspired innovation, but like, take when you look at it's like when you look at Mercedes, let's say, like, Mercedes is the king of luxury, okay? Tesla doesn't do luxury, in my opinion. What they do is what you want. And what you want, they do it best. I mean, air conditioning. Okay, we're gonna make the best air conditioning you've ever had in a car. And you're not even gonna know where the air conditioning vents are, and you can direct it to any point in the car. Like, from the bottom up, from the literally the windshield washer fluid, like, the engineering is a marvel. Like, it's so mind-boggling to me. Like, when I looked at the release of the Plaid, I'm like video games. They're just like, hey, people want to play games. If they can't play their PlayStation in their car, why the hell are they going to have an entertainment system in their car? Speakers. They're like, they have 27 or something speakers in the whole car that are going to evolve over time to kind of adjust, and let alone the way their self-driving operates. Oh my God. Like, go watch the Plaid release and then compare it to any other car that's coming out right now. And I'm in love. What can I say? The engineering, guys, it tickles my fancy to a level. I'm not a car guy. I'm honestly not a car guy. I don't give a shit about vehicles. I never have. I admire engineering. And if you look at Tesla's vehicle and you can get past Elon Musk, if you can get past the valuation of it in and of itself, and you just look at the innovation from the bottom up, the fact that they use the least amount of wiring harnesses, the fact that they have an incredibly innovative cooling system. I know Volkswagen just came out with an electric motor that's pretty incredible. And I thought Volkswagen had the best electric motor. And then all of a sudden on the Plaid, somehow Tesla made it so there's no, because the big problem with the electric motors was in the first like 0 to 60, it's instantaneous. But then once you get up to about 100 miles an hour, the torque would start falling off, and you wouldn't get that knee jerk reaction anymore. It would just start leveling. Somehow in the Plaid, they taken the electric motor and made it from 0 to 200 miles an hour, like with no lag. There's no pullback in power. I don't know what they did, but I'm like, shit, like every time I think somebody's catching up to Tesla in some way on some level, they're already there. They're like, whatever, like we've been doing this longer than these guys. These guys are still just figuring out the basis, right? Like there's one competitor, what was the company called? I think there's one and when I say competitor, I don't mean by manufacturing or by engineering. I mean just by purely having a solid electric vehicle that is comparable and competible in price. Because what people don't understand, when you look at Mercedes, when you look at, say, the Hummer, which I think is ridiculous. Why the hell would you release a Hummer? It's not a mass market vehicle. The Silverado would have been a mass market vehicle, in my opinion. But when you look at when you just look at these vehicles, guys, you have to ask yourself from a business standpoint. It has to be scalable, it has to be competible, and the price point literally has to be to get to scale. The price point has to be around 25 or 30,000. If you can't get an electric vehicle down to that price point, no one you again. Look at Mercedes. Mercedes makes good money. They make good money, but they sell to a niche audience. Yeah, I mean, that's the Porsche sells to a niche audience. Every electric vehicle that's pretty much come out only sells to a niche audience. And yeah, that there's good margins in that, but there's no scale. You're not going to become 100 multi-billion-dollar company without scale. And that's what most of these companies lack. However, in China, they do not lack that. And I think it's Volkswagen is manufacturing these cars in China. And what the hell? Polestar. I think Polestar is going to be one of the first major competitors to Tesla. Only because, not because, like, there's a lot of stupid things in the car that I don't like, some design things that didn't make sense, but they will make it to scale and they will make it to affordability. And that's what people need. People just want affordable, cheap electric cars. And it doesn't have, yeah, Neo's good too. But those, again, all Chinese, China is crushing the EV game. I think it's going to dominate. And I think just like for the iPhone, I think in the next 10 years, guys, most of these big brand automakers that you're currently aware of, they're not going to exist. I think we're going to see this happen to every industry that exists. It happened to the candy industry. It's happened to the phone industry, the gaming industry. The streaming industry is only made up by like a few handful of companies. And I think that's what's going to happen in the auto industry in the next decade. I think people are big fans of a lot of companies. And yeah, Toyota is not ignoring a Tesla. Yeah, Toyota, but they're behind, man. Like Toyota's also trying to get into a lot of things and they're not just there yet. See, this is the branding problem. This is another thing people don't realize, that like branding matters. And everybody knows Elon Musk. Everybody knows Tesla. Who the F is talking about Toyota? Nobody. Who the F is talking about any of these companies? Nobody. No one cares. I mean, it's a shame, but I mean, Tesla owns the branding. And if you don't think that matters, go look at Nike, go look at Apple, go look at these companies that in 2008, you would have said, oh, why does everybody like shoes that are so expensive? It's just Nike. Hey, iPhone is just an iPhone. Anyone can make a phone, but people lack the understanding that it's the ecosystem that not only surrounds it, but the branding power. If you don't have true standing branding power, the brand matters more than the product almost. If everything isn't working symbiotically together, sometimes you have to understand that works into the valuation of the company. Tesla has no problem raising capital. They could sell any product they want and instantly raise $1 billion if they want to. I don't think a lot of companies could say the same. If I'm being honest, I don't think a lot of auto companies could say the same. I don't think any of them have the earnings capability or the capital raise capability that Tesla has, and it is something to not be ignored. If you're ignoring that, I mean, again, Tesla's an expensive company. It's controversial. What does Grant Cardone say, guys? If it's controversial, it's good. It's good for business, baby. Because half the people gonna hate you, half the people gonna love you. But if you want a good example, look at the Cybertruck. The Cybertruck is outselling the F-150. I mean, that was the big debut, right? The Ford Lightning, which is incredible. They did a good job on it, but the sales aren't matching the Cybertruck. They're just selling to an audience now. They're not selling to a new audience. They're just selling to the F-150 audience, and eventually they're going to bleed off. Unfortunately, it's true because their branding power isn't what it used to be, and Tesla's crushing it, crushing them on sales for Cyber. It's all kind of semi-release. I mean, because I think there was a release that they maybe had 80,000 Cybertrucks on pre-order on the day one of launch, and I think the F-150 Lightning was at 40,000. I think they hit six figures now. The F-150, I'd have to double check. Anyways, folks, any last final questions and answers? We're 38 minutes deep into this stream of consciousness. A lot of fun talking about investing. What's your thoughts on moving dividend stocks into VTI? Well, listening to Matt on the last few vids and had similar thoughts. Yeah, VTI, I think it's a great idea. VTI is awesome capital raise, but Ford GM can get crazy cheap access to capital if they need to. See, here's the problem. Like, they're old manufacturing and they have to catch up. And it's just, I don't know. When people talk to me like they're these, like GM's the same as Tesla or Ford or even Mercedes is the same as Tesla, it's almost laughable because you guys have never looked. Do your due diligence. I mean, like, I don't want to be that guy that just says like all these other companies suck, but I'm sorry, they're. How about this? Don't listen to me. I'm an idiot. I don't know what the hell I'm talking about. Go watch Sandy Munro. Sandy Munro gets paid six figures from all the major auto manufacturers to tear their cars apart and tell them what's wrong with it. That guy knows what he's talking about. And that guy is betting on Tesla. I mean, just go listen to mechanics talk about Tesla. Don't listen to me. I'm an idiot. When people that make millions of dollars being mechanics are talking about auto companies and saying, what the hell is GM and Ford? Like they're trying to catch up to Tesla. And then they just show you the marvels behind the manufacturing and just the engineering behind Tesla. Don't listen to me. I'm an idiot. Don't argue with me. I'm an idiot. Go argue with somebody that knows what they're talking about. And I'm sure you'll come to the same conclusion that from the top down. I mean, this guy used to work for GM and he says their manufacturing is a joke compared to Tesla's. GM is living off dinosaur manufacturing. I mean, guys, okay. GM has been decreasing plants. They have been think about how many bailouts they took from the government. Think about all the plants they shut down and the job losses. Tesla is expanding faster than any car company that exists right now. It's crazy. It's just crazy. And GM is shrinking. They're not growing. They're shrinking manufacturing. They're shrinking the lineup of vehicles. Tesla's growing the lineup of vehicles. Think about that. Ford cut off half their cars. They're only selling the Mustang now and the trucks. Like, they're decreasing dinosaurs. They're not innovative. They're dumb. They're just dumb in my opinion. And now they're forced to, not by their own volition, they're forced to innovate. And I think and most of them aren't going to survive this. They're just not. They're not going to survive this transition. It is a brutal transition on a manufacturing and logistics level that I just don't think people appreciate. And it's going to destroy them. It's going to crush them. How would you play cybersecurity with all these ransomware attacks? Cybersecurity is a huge business, a huge. I mean, what's the guy from the Dragon's Den? I can't remember the guy's name off the top of my head. He only does cybersecurity. Actually, I know people that get paid to go into banks and try and hack their system and then tell them where they find flaws. It's a huge business. Oh man, if you're good at hacking, you make a lot of money. Like, a lot of people, though it's illegal, if you're good at hacking, what you do is you hack a business, you don't tell them that you hacked them, and then you take it to their business and say, hey guys, you're an idiot. This is what I did. And I'm going to tell you how I did it, but you're going to pay me. I'm not going to do anything illegal. It's kind of illegal, semi-illegal, but I mean, when you can play cybersecurity, oh my God, you can be a cocky mother effer, man. You can be who survives the electric vehicle space. I don't know who survives. I know Tesla's going to survive. They're going to be around. It's an easy bet. Who else survives? They have to prove that they're going to survive. Ford is starting to prove they're going to survive. I mean, Ford is proving that their audience wants to buy their vehicles. That's all that matters. If you can prove that you're going to be around and you can make it to profitability before the transition ends. Do you have a website? I have a bunch of websites, man. I run a lot of websites, a lot of websites. I don't run personal branded websites like I used to. I just closed off my Magic website because my career's bust. So I gave up on that for now. I run a bunch of blog websites, nothing that I would just throw up on here because they're just kind of different. I try and segregate my businesses. Most people don't realize that YouTube is fickle and very terrifying to me. I've seen channels get ripped off, like just cut off overnight because the algorithm screwed up and thought they were spam websites and just closed them, deleted all their videos. Poof. I mean, YouTube stepped in and deleted so many people's videos on the first purge. I am terrified of YouTube. I got my first flag ever where somebody basically gave me a flag for one of the content saying I ripped it off, even though I know it was in fair use, but I can't dispute it because Verizon was the company that was flagging me. Verizon, F you, by the way. I hate Verizon. They can go burn in a hole. I hate them with a passion because of it, but I like divesting my business. So I run TikTok, YouTube, Facebook, blogs, websites, and I try and keep them all separated because heaven forbid YouTube blows up in my face. I'm always going to have something else to turn to. And I'm always been a paranoid nut job about my business. So I'm always trying to make sure that if one thing goes, I'm still able to function on some degree. Hey, Kyle, was curious if it makes sense as an investing strategy to start with the most expensive stocks I want to purchase, aka Google, Amazon, and then tackle cheaper positions. I don't I wouldn't call them expensive stocks. Expensive is relative because some people look at Amazon and say, "Oh, it's $3,000 a share. It's an expensive stock. I could go buy a $2 stock or Tattoo Chef or whatever." Don't look at it from that perspective. Just look at your portfolio of what I call future leaning companies. So you want to build out a portfolio that is going to be the most robust for what the future is going to be. And this is what most people lack, in my opinion. They just look at dividends. They just look at the price and, oh my God, it's expensive. What? Just ask yourself what companies are going to be the most prevalent in the next 5 to 10 years. Anything to deal with AI, which I talk about a lot. AI is something everybody overlooks. They don't understand it. They're dumb. They've never looked into machine learning, and it's going to replace every business from the way you order your pizza to the call centers to the way you drive your car to the way buildings are going to be built to the way already planes are being built with machine learning AI. You do not want to miss that wave, and you're going to want to be a part of it. And unfortunately, only a few companies hold those. So that's your Amazon, your Microsoft, your Teslas. You want to own those. Forget the price of them. Just balance them in and percentage weight them. Like, I don't want to own 50% of Tesla in my portfolio. That to me is nutty. These Tesla nut jobs that have 100% of their entire lives invested in Tesla make me paranoid. I mean, think about somebody like Hyperchange. All Hyperchange does for his whole living, and I'm a Tesla fanboy, but I recognize that shit happens. Companies can go belly up. Something terrible could happen for whatever reason. That is true for Amazon, as it is true for Facebook, as it is true for Tesla, all of them. So I don't understand why these guys put all their eggs in this one basket. All they own is Tesla. All they talk about is Tesla. It's just like, I get it. Right now, it's so cool. It's so innovative. It's fun to talk about. But from an investment standpoint, it's stupid. It's very risky. It's very stupid. And yeah, it could make them multimillionaires for sure. But from my perspective, don't do it. It's too undiversified. But yeah, just weight your portfolio based off a few things. I personally weighted off cash flow because I want dividends because my job's unsustainable and I want to be able to invest even with the dividends in case things drop. Like if my growth stocks drop, I want to be able to have cash flow to keep investing. So I like my dividend companies. I like my very forward future leaning companies for sure, your Googles and Amazons. And then I also just like having I want to start adding the index funds at some point too, but for right now, it's just a dividends and the growth stocks or my future forward stocks. But can't compare $2. Sorry, yeah, you can't compare $2. I'm not sure what you're saying there. Stocks to 3,500 stocks to 3,500 ones. Not sure what you're saying there. Can't yeah, I don't know. $2 stocks to $3,500 like that. I'm not sure the comparison. But are you buying more Telus? Yeah, I want to buy more Telus. Telus is I don't like Telecom. It took me so long to buy into Telecom, guys. Oh my God. Telecom. Telecom scares the hell out of me because I don't understand the industry very well. So I've avoided it. And thank God I did. AT&T, everyone's like, oh, buy AT&T, just buy it. I'm like, what do you know about it? I'm like, I know more about American Towers. And American Towers has been a better business servicing AT&T than AT&T's its own business has been lately. So, I mean, I didn't understand it. So I'm not going to buy something just because people say, oh, it's the dividend aristocrat. Not anymore. They screwed that up. And like I look at TELUS, and from a Canadian standpoint, the Canadian economy is booming. People are moving here like crazy. I really love the Canadian economy for real estate. Anything that's industrious, when you're talking about infrastructure, like telecom, real estate, and banks, anything that basically people have to use. So that's where I became interested in telecom because I understand the Canadian economy. And if you're coming to Canada, you're going to be signing up to one of the few telecom companies. And unfortunately, Starlink isn't. It's going to disrupt some of their business, but no, they're not going to disrupt 5G. TELUS just made like a $3 billion investment into 5G. They're involved in telehealth. They do security. Like they're in the best, most boring businesses ever. Telehealth is the future. Everybody wants home security now. People are always paranoid, more paranoid than ever about everything. I mean, and then they still operate the phone systems and the Wi-Fi. Like it's a brilliant business model. I love TELUS. TELUS is a great company. It's very diversified. That's what I love about it. And I think the management's better than AT&T, but they're kind of hard to compare because AT&T is massive. It's like $100+ billion business. TELUS is what? Like I don't even think TELUS is like a quarter the size of AT&T. You can't even compare them. It's like apples to oranges, man. Any updates on the SRAC merger? So I currently don't own SRAC. My girlfriend still owns it. I still think I hold the position for my mom. It's a highly volatile investment. I'm still poising it based off of the team they have because I know that they finally diversed away from the management problems, because the guy that unfortunately took the company to where it was involved. I mean, he was what do they call it when you flee another country and you're kind of coming into a new country and you're kind of, what's that called? You know, when you're like harboring from another country, what's it called when you're not actually a citizen? That's what happened with SRAC because this Russian guy kind of took the company to where it was, and now they're being investigated. Oh, God, it sucks. It's really holding their business back. But because of the management and the people that are in the company, for the space industry, space is not going to be profitable unless you're involved in satellites. And so long as SRAC isn't bullshitting their technology, and I don't think they are, it's just a matter of time before they like. I don't know. It's risky. It's risky. I'm hoping they merge though at some point because now they've divested. I keep using that word divest, probably not the right word. Now that they've kind of pushed away the management problems, I think they're going to fast track all these investigations are going through. But that's the risk. If you're buying SRAC, just sit on it. I wouldn't, if you got a little bit of a risk in it, I just wait. It's a really interesting space play for sure. If you want a safe space play, buy Lockheed. I love Lockheed Martin. There was another great company. I got it at a great price. Oh my God. BlockFi. I don't use BlockFi. I don't like using Bitcoin as a reoccurring like income stream. I know PPCE and some of the dividend community guys love using BlockFi to obviously stream income off your Bitcoin to loan it out, but I don't own Bitcoin for that reason. I own it like I own gold. I own it as something that is a different investment class from the stock market and the currency class that I'm involved with. I love Bitcoin because it's liquid. I can transfer it to any currency and it protects my portfolio against a major crash, in my opinion. I could be wrong about that, but I don't want to leverage that out to another company. I want my Bitcoin in my possession, just like I want my gold in my possession. I do not want to leverage that shit out. I just want it in my possession at all times in case I end up traveling in a third world country and shit hits the fan. If you're traveling abroad like I want to, Bitcoin is widely accepted globally. A lot. It just, I need liquidity in a case of an emergency. And trust me, you don't think you're ever going to need it, but that time you need it, you're going to wish you had it. And I talked to Serafino Locano. He's an awesome dude, runs one of the largest gold mines on the planet. We're working with him actually with some new companies as well on the promotion side of things. And he literally gave me the first use case I ever heard of somebody using gold to get out of an issue because he was in some crazy like world. God, no, I can't remember where it was. What was that country? He told me I can't remember the country off the top of my head, but he got stuck at the airport and they didn't want to release him, and he paid them a gold coin and they let him go. He said, "Yeah, I had gold with me, and he's like they were hassling me. They wanted to find me, and I just gave them gold, and they just left me." I was like, "That's just it, right?" Like, I imagine they would have taken cash too, but sometimes just having some of those assets on you, and I think Bitcoin's the easiest asset of all time to carry with you anywhere at any time. And like I said, if shit hits the fan, I guarantee you someone's going to accept it for sure. Any thoughts on GTTF or PLNHF? I'll have to take a look at those ones. The PLNHF sounds really familiar for some reason. Any psych stocks you're excited about? Yeah. Psychedelic sector. I'll tell you guys on this really quick. This is a weird one. So unfortunately, MindMed, the CEO, was forced out of his position. I don't know if it was forced or he stepped down himself. I'm worried about him. I'm worried that he's, and this is a bad thing to say. I've been very careful about how I've talked about this because I think something bad's going on with him. I don't know if it's family related. He used to be a drug addict, unfortunately. I'm hoping he didn't go back down that path. But when you read an article that says the CEO is being stepped down effective immediately, and they have to put an interim CEO in because they didn't graze themselves time to find a new CEO, it's a did he step down? Is there any news that came out about it? I have yet to find any news because usually when a CEO steps down, the first thing you see is a media cycle because they want to tell people, hey, I'm stepping back. I feel like I've done my job. This new guy's going to take this thing to the moon. That's not what they did. They kept it hush hush. He stepped down. It was one news release. That was it. And he did not seem like a guy that was going to step down. I mean, why? So I don't. So first of all, let me talk about MyMed real quick for those that you hold it. I don't recommend selling it. If you hold it, keep it for the same reasons I bought it, which is trials. These drug trials are going to come through. They're going to be incredible. The stock's going to fly up, then sell it. Do not hold these long term. These are not companies you want to take long term unless you're willing to gamble. If you're comfortable holding it as a lottery ticket past there, by all means. But MyMed is not the greatest company of all of them, in my opinion. Haven Life is doing a lot of other things like supplement. I talked about this in my. You can go watch my psychedelic video. I posted like a day or two ago. Go watch that. I kind of touch base on all the different psychedelic companies and what they're doing because Numinous Wellness, they're acquiring actual facilities right now, healthcare, mental facilities, clinics to start helping people today, and then they can implement the psychedelics once they become legal or federally approved, so they can administer those drugs to their clinics. I mean, you see the same thing with Compass Pathways, and then you look at something like Haven. Haven is releasing supplement lineups so they can start helping people today. That's something MindMed is not doing, and I think it's a bad move. MindMed does not have a path to actually getting these drugs out. They have nothing. They have a telehealth company they bought that has no repercussions for today. Everything they're doing does not cash flow anything today. I like the company, but the psychedelic sector is unknown. In 3 to 5 years, it is unknown what happens. Nobody knows what the outcomes are going to look like. We don't, even though the drug trials will be great, that does not mean the business model is going to be great. We don't know. It's really sketchy. But in light of all this, folks, yeah, LMT at 320 for the win. Maybe I'll show you guys my Okay, so I'm a space nerd. Lockheed Martin was responsible for basically getting the lander on Mars. Oh my god, it's so I love it. I'm like a little child when I watch this stuff. I had to buy Lockheed Martin. I'm not the biggest fan of the jets and the rockets, but if you look at the aerospace sector of their portfolio or of their balance sheet, the aerospace is blowing up. I think it grew by like 30 or 40% year over year. There is big money, billions of dollars flooding into Lockheed Martin to keep these missions going to the moon, keep these landers and these robots landing on other planets. Lockheed Martin, in my opinion, is just, oh my God. I fell in love with that company thanks to Cole in our chat group, because I mean, he was chatting about that a lot. He was really into that company. He knows way more about it than I do. But maybe I'll show you guys my Lockheed position really quick, because that's one I don't talk about a lot. It's a very boring company to most because it's involved in obviously rockets and some of the war based side of their income. And that's kind of the give and take. It's just like if you want to get involved in space, you either have to take on a ton of risk and buy one of these brand new companies that has no proven business model, or you have to buy into an OG company like Lockheed Martin. But then you're getting, the war side of it, the rockets, the missiles, and it's an unfortunate side of the business that I'm not the biggest fan of, but I mean, it is what it is. So let me show you my Lockheed position because it's like my favorite. Look at that. What a beautiful position. Oh man, I picked that up at such a great price. 18 shares, average buy price, $346 a share. I love it. My problem with MindMed is longer term play, and it goes to 450, then back to 380. Yeah, Cole was talking about it before him. Yeah, no, Cole's OG man, Bailey. Cole knows a lot. He's really into the Jets and stuff. That guy's got way more experience in Lockheed than I do for sure. What else we got going on here, folks? I think I'm gonna kick it off. We're about 55 minutes deep. I really appreciate everyone that popped in. Please hit the like button. It definitely helps the channel out. But yeah, anyways, I think I'll kick it off here, guys. I just haven't posted a video. I'm gonna try and you guys seem to enjoy these live streams, so I'm gonna try and do some stream of consciousness live streams a little bit more, maybe once a week or something, once every other week, because I do enjoy doing them as well. But stay cool, stay awesome, folks. Appreciate y'all coming out, and I can't wait to catch you tomorrow. Peace.